Hey guys, so I just wanted to make a weekly overview video and we're going to cover a lot of TA and a lot of different tickers here. So starting with this week, we're going to have a few bank earnings and just the economic calendar in general is looking pretty sparse this week. But next week, we're going to get a slurry of economic data. So do watch out for that weekend video next week. I'm going to be talking a lot about the different economic data that we're going to get. But this week, we're mostly going to see some earnings. So, particularly, we're going to see Bank of America, Goldman Sachs, Ally, Tesla, and Snap. And we're also going to get that Google stock split. So, Google officially did their stock split on Friday close. So, come Monday morning, we're going to see that 20 to 1 stock split. So, starting with Bank of America. So if we're just looking at the chart on Bank of America right now, we are definitely in a falling wedge pattern. So I'm going to take out these moving averages so you guys can see this a little bit better. So when we do see a falling wedge pattern like this, we're generally seeing a bounce off support line right here and a reject off a resistance line right here. And this actually gets tighter and tighter and tighter. And eventually we see a breakout either to the downside or to the upside. So I do believe that we could break out of this wedge come earnings. And that could either be a good thing, we could break up or we could break down. So let's go ahead and throw on these moving averages again. So right now, we definitely saw a pretty big bounce off this support trend line right here. And right now we're trading at 32.35, but we're still below the top of this wedge right here. So we're still stuck in this wedge. Now, if we're looking at the weekly expected move, we're expecting a low of 30.13. So 30.13 is basically going right back down and filling this gap. And 34.37 is where we're expecting our high to be, which is, let's see, 34.37. That's actually going right back to this gap area right here. So if I'm just looking at that, I mean, I think it's pretty feasible. I mean, if we do have good earnings, I think we could go ahead, maybe fill this gap, make it back above the 50-day moving average. And if we have bad earnings, then yeah, I think this entire day just gets erased and we go right back, fill this gap. Maybe we go below. So just a reminder of how I find these expected moves. I'm basically going on Thinkorswim, and what I am looking at, so let's just type in BAC right here. I'm essentially getting this deviation right here. So that's $2.12, and that's plus or minus. So essentially what I'm doing is that I'm getting the stock price, I'm adding $2.12 to it to get the high, I'm subtracting $2.12 to get the low. Now right back to our charts. So that's essentially what I'm expecting for Bank of America here. Now, Goldman Sachs. So Goldman Sachs is in a very similar position where we also are in this falling wedge pattern. Now, if I'm looking at Goldman Sachs, we're back above the 20-day moving average. We had a pretty strong bounce here. So what are we looking at for the expected move? We're looking at 279.57 to the downside. So let's see, 279.57. That's essentially going back to this bottom right here. And 308.17 to the upside. So what we're looking at for the upside is basically above the 50-day moving average. So right around here where we priorly rejected. So we do have this gap zone that we did fill. So we could just go back and retest this gap zone, maybe get above the 50-day moving average slightly. And that would actually take us out of this falling wedge right here. So that would be a very interesting development if we did break out of this wedge, if we did get back above this 50-day moving average. It would definitely send SPY higher if the financials did better. So that's what I'm looking at for Goldman Sachs here. Now, even further to the downside, I would expect, a touch maybe down to this bottom trend line. So, that could be something like 267 if the earnings are really, really bad. Now, keep in mind, bank stocks, their earnings fluctuate so much. So what you really want to look at is their net tangible net tangible assets. So that's a pretty important metric when you're looking at bank stocks. Now, with Ally here, Ally, it doesn't look too good. So we did see this massive gap right here. So let me go on the daily time frame. So we do have this massive gap right here. And let's say that Ally does have some good earnings. Well, I do think that, in the future, we could go and fill this gap if the earnings are good. So what we're looking at for the expected move here is $30.38 to the downside. So that would actually be breaking this support right here. And $38.48 to the upside. So that would actually take us above this 50-day moving average. And that could, that's essentially filling this gap right there. And that could possibly take us to this gap right here if we continue that bullish momentum, which would essentially be right around $40.32 to fill this gap right here. So Ally does have quite a bit of work to do. I mean, we've fallen pretty significantly since the start of June. Now let's look at Tesla. So Tesla is kind of stuck in this wedge right here, as you guys can see. We've just been chopping around, bouncing back and forth. This wedge is getting very, very tight. We're actually slightly below the 50-day moving average. So 50-day moving average is at 722.42, and we're at 720.20. But we are above this 20-day moving average. So things are looking a little bit better for Tesla. I mean, we've essentially chopped around sideways so much that this 50-day moving average was able to catch up with price action. So to the upside, we're looking at 778.70 for the expected move. So that's still within this range. I mean, we do have a pretty strong resistance showing up at 758.80. And the next line of resistance is going to be 791.71. Now, if we do break these two resistances, we could literally skyrocket. So that's going to depend a lot on what they actually report, obviously. So to the downside, we could see 661.70 is what the expected move is expecting. So that's actually going to be below this wedge right here. So we'll actually break out of this wedge. Now, if we do break out of this wedge, I do think we could go and retest 625.66. So that's my thoughts on Tesla. And Snap. So with Snap, we're going to see $10.98 is the expected move to the downside. So that's going to be actually breaking this little line of support right here. So Snap is in such a strong downtrend. I mean, it's going to be pretty scary if they report bad earnings, because it's going to basically hurt all of these social media stocks. And I mean, this thing is getting down pretty low. We went all the way from $83.34 to this measly $13.65. So yeah, it's going to be pretty scary if they report bad earnings. So just expect the entire social media stocks to all sell off. Now, Snap to the upside for the expected move is 1632. So essentially, that's basically looking back into this area right here, which is running right into resistance. Now, Snap has produced pretty strong bounces from earnings before. If we're just looking at this last earning, I mean, we literally went from this 24.29 all the way up to 42 area. So it almost doubled. So if Snap does report good earnings, I wouldn't be surprised if we just went back and we filled this gap right at 21.44. So that's Snap for you. Now, I did skip over Netflix, and that's because I did make a video on Netflix. So definitely check that out, you guys. Now, that basically covers all the important earnings for this week. Now, jumping straight into Google. So Google is going to get that stock split. Now, right now, we are kind of seeing something interesting right now. We see this 20-day moving average curling up. We see this 50-day moving average finally catching up to the price action. So what could happen is if we do get bullish, we could actually have this 20-day moving average cross over the 50-day. So that would be a bullish sign. Now, where we are right now is actually slightly under the 50-day moving average. We are at 2,255. The 50-day moving average is at 2,265. Now, if we are looking at Google, well, based off this price right now, after the split, it's going to be $112.77 because we're dividing this by 20. Now, if we're looking at the low range and the high range, the low range is expected to be 107.35. The high range is expected to be 118.18. But if I am looking at this current chart right now, and we're looking at resistance and support, I'm going to have to draw out my calculator right here just so I can show you guys. So resistance is going to show up right around 2,379. So let's just divide that by 20. So 2,379 is where resistance shows up. Divide that by 20. So watch out for 119 after the stock split. So that is slightly above the higher end of the expected move. Now, if we're looking at support, I mean, support's going to come right on this trend line right here. So we're looking probably around 2,200. So let's just go ahead and do that math. So 2,200, divide that by 20. That's going to be 110. And that is actually slightly above the lower end of the expected move, which was at 107.35. So do watch out for those areas as support and resistance when the stock split actually happens. Now, if we do get really, really bullish on this stock split, I mean, you know, there is a potential that we could actually enter this range right here. So if we are going to meet this higher range right here, which is right around 2,492. So 2,492, we'll divide that by 20. That'll be 124.60 as a higher range. Now at that point, you know, things get really frothy because just look at all this resistance right here. We have prior support that was right here, right here, right there, and right there. Now this is all going to be very strong resistance going forth. So if at any point in time you do start seeing Google right around 124.60, do be cautious because that is where a lot of strong resistance shows up. Now let's go over to the next stock. Let's look at Apple. So Apple right now, it's looking pretty darn bullish. I mean, let's just look at this right now. So we had this falling wedge pattern right here. We broke out of this falling wedge, and that happened on very strong movement right here. As you guys can see, we hit the top of this trend channel that we're currently in right now. So this trend channel is this right here. I know I got a lot of lines going on. And what we can see is that when we broke out of this trend channel, or when we broke out of this falling wedge, we entered this trend channel, we rallied high, we rejected off the top of this trend channel, and then look where we bounced off. We bounced off this prior trend channel that was right here. So that's actually a pretty bullish look. So we bounced off that right there, as you guys can see, right there and right there. And we're now above the 50-day moving average, which is 143.73. We're at 150.17. Now look where we're at right now. We're back at the top of this trend channel. And if we're just looking right here, we do run into resistance right around 151.77. So if we do get above that, we are essentially going to build a higher high, which we haven't done in quite a while. So that's going to be a pretty big move. And if we do break out of that, I would be cautious because that could potentially be a bull trap if we do break out of this trend channel right here. Now we do have resistance that we could run into, which is going to be the 100-day moving average at 154.48. So do watch out for that as well. And let's just throw on the Bollinger Bands right here. So if we do throw on these Bollinger Bands, I mean, this is looking pretty overbought right now. I would think that, you know, a pullback could be due very soon here. And, you know, that pullback, it could be a pretty strong pullback. You know, we could pull back all the way back to the bottom of this range right here, which is right around 142, or it's like 143-ish. So it's right around 143. So that could line up with this 20-day or 50-day moving average. So right around 153.73, if we continue this trajectory, is kind of where I expect that we could actually pull back to if we get some bearish news, or if people start getting a little bit more cautious around that mega cap earnings and interest rate hikes. So that's kind of what I'm expecting for Apple. And for the rest of these stocks that I'm going to be talking about, I will have the expected moves for you guys in the Discord channel. So definitely check that out. Now with SPY right now, if we're looking at SPY, we are kind of in this falling wedge pattern. And we did recently invalidate this uptrend line, but we made it back above it. That's the key thing. And we bounced off this 20-day moving average. So right now, it's still a lot of chop going on here. But the immediate thing to notice is that this 50-day moving average right here is at 391.80. So that could act as resistance. And we do still have this gap right here, which is going from right around 394.24 to about 400. So that's the really big move that I'm looking for, is if we do fill this gap, what's going to happen next. Now, that's essentially what I'm looking at for SPY. Let's go over to Qs. Now, if we're looking at the Qs, we did break out of this wedge. And we're actually about to run into the 50-day moving average right here. So the 50-day moving average is 293.36. We're at 291.87. So if we did get back above that, that would be pretty bullish. But we do run into resistance. That's going to be this potential triple top that we could have. That's going to be right around 296.78. And we could potentially fill this gap right here, which is right around 299 if we did do this gap fill right here. And you notice that we never actually filled that gap. We've tried coming pretty darn close, but we went and rejected right around this 296.78 level. So do watch out for that. We could potentially produce a triple top and then fade. But right now, I would say it's looking pretty darn bullish because we did break out of this wedge. We did go back to retest this upper trend line, and we did bounce off it. So technicals are looking bullish right now, but do remember that, we have a slurry of earnings, and that could quickly change, and technicals could just be thrown out of the water. So let's take a look at XLF. So XLF is actually looking pretty decent right now. We did break out of the shorter term falling wedge. But if we are connecting these tops right here, so this top, and that top, we do have the next line of resistance, which is kind of lining up with this 50-day moving average. So the next area of resistance that we could run into is going to be right around 32.90. That does happen to coincide with this former resistance that we had right there, which, as you guys can see, we had a sharp reject, and it does kind of end up with the bottom of this gap fill. Now, if we did fill this gap, that could take us all the way up to 33.59, but the lower end of this gap is going to show itself right around 33, which, like I said, it's pretty much the 50-day moving average, which is 32.90. So that's what I'm looking at for the financial sector. XLE looks pretty darn interesting here. So we did have this falling wedge. We broke out of this falling wedge. We bounced off this 200-day moving average right here. We actually had a bear trap where we fell underneath the 200-day moving average, and then we quickly rebounded. As you guys can see, rebounded off the 200-day moving average. Now we're back out of this wedge. So it's going to be interesting to see what happens with XLE. So I'll definitely be watching this in the future. Now the dollar right now is having a slight pullback. It did get very overextended. I was talking about that last week. Now, if I'm just pulling up the Bollinger Bands, you can see that we peaked out of the Bollinger Bands multiple times. So to me, it's not surprising that we're seeing a pullback. Now, a pullback, I was expecting a pullback to happen after the CPI read. And I do kind of expect us to rally back again when we get closer to that interest rate hike. So I do think we could see sort of a small little cool down between now and the interest rate hike. So I am looking for another bounce when that potential 0.75 rate 0.75 rate happens. So the VIX is pretty interesting as well because look what's happening right now. We're basically on the 200-day moving average. So are we going to have a bounce off here? And if not, then I do think equities are going to rally pretty strongly. And, we could fill a lot of those gaps to the upside. Now, the VIX will have another area of support, and it's going to show up right on this line right here. Now, you guys can see it touched right there, right there, right there. So, if we do bounce off here, it will be a fourth bounce, and it would pretty much be a very strong area of support. Now, if we do bounce around here, the VIX is going to be right around 22. So do watch out for the VIX right now. We do have a curling 50-day moving average. So, we'll see if we bounce off here. We're going to have some pretty negative news from banks to get a potential bounce off here. So that could essentially happen because we do have Bank of America and Goldman Sachs and Ally all on Monday and Tuesday for earnings. Now, VXN, this is NASDAQ volatility. There is something important that I do want to point out. We do have the support line right here. It's bounced off once, twice, 3 times. It also lines up with the 200-day moving average. So right now, we're at 30.39. So if we are going to produce a bounce off here, it's going to be right around 29.40. So do pay attention to NASDAQ volatility. I do think, maybe we could rally just a little bit more, and then maybe we produce a bounce right off here. And that's going to cause the tech sector to probably sell off a little bit if we do bounce off this area. So that's basically all I got for technicals, you guys. I hope you enjoyed this video. Definitely leave a like, a subscribe, or just a comment. Tell me what you think. And I hope you guys have a great one. Safe trading next week.